question is, how much can she make before, whether it be household income or an individual, before she has to pay that subsidy back?
There's a calculator to do that, and I can't tell you off the top of my head, Dave.
Yeah, Dave, unfortunately, I can't tell you either, but
Okay.
there is a calculator, and a number of people do manage their income to try to maintain that subsidy. And so you could maybe give Rodney a call off the air, and he might have access to that calculator, or give our office a call on Monday, and someone could walk through that with you. But there is an online calculator that will show you, just how much income you can have before you begin to lose the subsidy.
All right.
Thanks
I
for
appreciate it.
Thank you for
All
the
right,
call,
Dave.
Dave.
Thanks for calling.
All right, good stuff there, Dave. 844-580-WDBO is the number, 844-580-9326. Let's go to Jason. He's calling in from Maitland. Jason, you are on the air.
Hey, Jason.
Good morning, Jason. What's up?
How you doing?
Hey, doing well, thank you. Just a quick question, and a high-level answer is awesome because I know you need specifics, but if someone's looking at, do they maintain their disability coverage or do they obtain long-term care, and say there's a limited amount of funds to pay for either or both of those insurances, how do you determine if one is more important than the other, or if you should just have a little of both?
Great
Say
question.
This person's, I'm 51.
Great
I'm
question.
51.
Okay.
And run a business, and I was just curious how you figure it out, right? You've had disability insurance 20 years, and now you're 51. You've paid for your in-laws or been a part of being a part of the process. More importantly, how do you determine it?
Now, you've paid for your in-laws. In other words, you've had the experience of having somebody in long-term care facility and see the cost.
Correct.
Is that what you're saying? Okay.
So you're a believer, yes.
Okay.
Yeah. Well, look.
I'm a believer in all of it: life, disability, long-term care.
Yeah.
Sure.
And I'm just
Absolutely.
curious. That's it.
Yeah.
That's my question.
Yeah, it's a great question, a very good question, and really what I hear you asking is, you have limited resources and there are kind of unlimited choices in terms of what you could spend on insurance, and what I'm going to say is they're both important. At age 51, again, this is where financial planning comes into play, where we look at your total situation and what other resources do you have, and if you were to become disabled, how would that impact your ability to live the rest of your life and your family and those who might be dependent upon you. I'll say typically at age 51, you're still in the accumulation mode and generally hitting your peak earning years. And so if something were to happen at that point, it could be financially devastating. And I generally would never advise someone to get rid of their disability insurance at age 51. I think you need to keep that into your 60s, and it most often will go away at 65 or full retirement age. Occasionally the policies will stop. That could be 67 probably in your case. But you are a believer because you've seen that long-term care is real, and it is not cheap. And I have a client right now going through this process, and it is costly. And so I think you're wisely looking down the road and saying, how do I prepare for this? I typically will tell folks to wait until age 60 to buy the coverage. And if you have the means to do it before then, I'm okay with that. But for most folks, I say wait until age 60. Your bigger risk right now is disability. And again, all this is dependent on your circumstances and your personal financial situation. But, Joe, how do you think about it?
Well, you want to have the whole package looked at. You're a believer in insurance, and there's definitely a place in insurance. With the new form of long-term care policy, there's what's called asset-based. You may be able to, excuse the pun, but kill two birds with one stone. So let's look at what your life insurance coverage is, what that is costing you, and you may want to convert that to a form of insurance that will cover long-term health care if you need it, and will cover the death benefit if you need it. So if you die, you don't need the long-term care, but if you need the long-term care, that means you didn't die. So with some of these new policies that are out there, it's a way to kind of get the best of both worlds. What we want to look at is really what your current needs are and what you're currently paying for the insurance, and it may be a way to get something. But I agree with Chris. You're probably a little bit too young to be concerned about long-term care. The only thing is that if your health changes, then you may not qualify, and that door is shut.
Yes.
So, but generally people can get it, when you're in your 60s, and you're still going to be okay. So without knowing your specific situation, it's difficult to give you advice, and that's kind of as you asked, a high level view answer, and that's what we
right.
gave you.
That's right. And if you want to talk about it further, Jason, give our office a call. We'll be glad to talk with you further and understand the specifics of your situation and what might make sense for you.